In this video, I'm going to teach you an easy to identify breakout setup that I call the post-earnings breakout setup. We're going to come at this from three main aspects. Number one, I'm going to teach you how to identify the setup when you're looking at a stock chart. Number two, I'm going to teach you what it is you're looking for from a fundamental perspective. What do you want to see on the earnings report? You'd like to see big earnings, big sales, raising full year guidance, positive market reaction. You're going to learn about all of that. And then the third and final part is I'm going to teach you how you can very quickly and easily screen for this type of setup. I'm going to take that a step further. What I've done is on my custom built stock screener, I've created a preset screen which is called US post gap consolidation. Now this is free up until the 12th of January 2024. So if you'd like to go and run through this screen, and I'm going to take you through a couple of the results, head over to my website. You can sign up for free and then you can test out this US post gap consolidation screen until the 12th of January. With all of that being said, MarketSmith are today's video sponsor. There's a discounted trial available in the comments below. You'll see a couple of their charts, especially when we're talking about the fundamental aspects in this video. So there's four examples that we're going to be going through in this video. We're going to start off with PDD because this is actually the top name that's come up from the US post gap consolidation screen. So I'm going to show you PDD and teach you about the setup. I'm going to show you Pinterest, I'm going to show you AMD, and I'm going to show you SolarEdge Technologies as well. But we're going to come at it from four main areas. Number one, how do you identify a high quality setup? How do you then initially control the risk, create asymmetric risk versus reward trading opportunities? How do you then mitigate the risk, so free roll the trade? And then what are the selling rules, selling guidelines to help you optimize the profits and ride the trend? So what I'm going to do here is I'm just going to click chart so you can see it. Remember, this is going to be a free screen until the 12th of January 2024. So this is PDD here, okay? So this is what you're going to be looking for. When you're screening, you're going to be looking for this gap and then a consolidation. Now this blue line you see here is the 21 SMA, and actually it broke out in the prior day or on the current day that I'm filming this video. So that's the breakout there, and I'm going to teach you specifically the setup. But this is what you're looking for. You're looking for the gap up and then the base and consolidation, which will commonly represent a flag, a pennant, a wedge, a Darvis box, a VCP, ascending triangle, potentially handle of a cup and handle, something like that. Those common chart patterns that you'll hear me talk about on the channel. So let's start with PDD first and foremost. So we can see here, this is what you're dialing your pattern recognition into, okay? You're looking for a stock that is in a strong uptrend and above all key moving averages. So on my chart, I've got the black line is the 10-day EMA, the blue line is the 21-day EMA, the purple line is the 50-day simple period moving average, and then the grey and the red line are the 100 and 200-day simple period moving averages. So what I'm looking for is a stock ideally in a powerful uptrend. There's a really nice setup here. You'll be able to identify that a little bit later on by the end of the video. Your eyes will be drawn to that and go, that's a really good setup there. Look at the gap up on the earnings, look at the volume coming through. But let's stay over here, Jack. Okay? So what you can see is the stock is in a clear powerful uptrend. It been basing here, broke out of the base. There's a big gap on the earnings and the volume. The volume is going to be an important point. You'd like to see very large relative volume. So the black line on my volume here, this is the 30-day average. If you want to use 24 days, 33.5 days, it's absolutely fine. You're just looking for a suitable average. For me, 30-day does the job. So you'd like to see large relative volume, a gap up, and a bullish candlestick. We'll come onto the candlesticks in a couple of minutes. You'll see down here as well that there's this blue dot on this line. What is this? This is the relative strength line, not RSI, relative strength line. And the blue dot indicates a 52-week high versus the S&P 500. You can change the index if you want to. That's a free tool in TradingView. If you search my name, you'll find it, Jack Corsellis RS line. Click that, and then what you want to do is right click on the line and then move to a new pane below like that. So we can see the PDD gapped up here, okay? Good volume, 52-week high. Now what I'm looking for is an optimal basing pattern. So then what I'd like to see is a variation of a flag, a pennant, a wedge, a Darvis box, ascending triangle, those kind of things, right? So PDD, it starts finding supportive action on the 10-day EMA, good. But then for a lot of setups, I'm looking for them to bounce off the 21-day EMA, find supportive action and hold their 21-day EMAs. Now, if you've been watching the channel for a little while, you'll know the type of candlesticks I like to look for are what I call trigger bars, shakeout to martels, and gap down reversal bars. So let me show you what a gap down reversal bar is. Let's just enlarge this chart, okay? And we'll come on to the fundamentals in a minute, don't worry. So this is a gap down reversal bar, okay? So what happens on this bar? Again, what we're looking for here is signs that institutions are stepping up and supporting the stock and buying in regions that we would expect them to be buying in. So the prior close is up here at around about $146. The stock then gaps down here, opens here, has a little tail that I call a shakeout to martel, little tail onto the 21-day EMA, and then a strong close. So what has price done? It's gapped down here and then pushed up. Sign of buying. sign of institutional support because it's happening right on the 21-day EMA a couple of weeks after this earnings gap up, and look how the volume is drying up. So you have this gap down reversal bar on low relative volume. It's below the 30-bar average that's undercutting a lot of these recent lows in the base. What's that telling you? There's not too much supply. The stock then bounces, pulls back down, and then puts in this shakeout demand tail. So on this session here, price moves down to the 21-day EMA and then closes back strong near the high of the day, and okay, the volume is still below the 30-bar average and it's putting in a higher low. This is bullish behavior. These shakeout demand tails, these gap down reversal bars are good signs to see as a stock is basing after an earnings gap like this. Why? Because for me, this is indicating that, okay, the bigger boys and girls in the market are in there up to their usual games. So then I'm looking for an optimal entry around this. So I like to look for trigger bars, gap down reverse bars, shakeout demand tails in locations and vicinities of certain moving averages when I'm seeing an optimal basing pattern for. So this here would have been a really good entry on PDD, like that, and then controlling the risk, 2.6% versus a 20-day ADR percentage of 2.68%. That's a pretty favorable setup right there. Now I'll show you one on Pinterest in a couple of minutes time, but I want to talk about the fundamentals here. So you can see on the earnings here, this is what you want to be looking for. Ideally, there is a surprise, both in terms of the earnings, but also in terms of the revenue as well. So the sales growth. So you can see that PDD had a positive surprise of 29%. The estimate for the market was $1.22, but the reported was $1.57. The market is kind of caught off guard. Institutions go, well, we were only estimating this, we were only putting this into our models, but the companies just report that. We've got to react to it. So this is what institutional buying looks like. So if I go and show you on the market Smith chart, we get a little bit more data. We'll come on to Pinterest in a few minutes time on the next one. So we look at PDD, we're looking at this bar here. Okay, this is that earnings gap up bar, and we can see that earnings are up 31% year over year. We get all the data down here. Okay, so $1.57 versus $1.21 year over year. Okay, earnings are up 31%. Sales are up 89% year over year. It's reported 9.4 billion versus last year at the same quarter 4.9 billion. So sales have just gone from 4.9 billion to 9.4 billion, and then the after-tax margin's 24.7%. But then it's not just what the company said and reported. What happened? What was the reaction? The reaction was very positive. Gap up, strong close candlestick. We can then take a look at the estimates. So 2023, 24%. The green arrow means forward guidance has been raised. 2024, 31%. Green arrow up, forward guidance has been raised. So these are the type of things that you want to be looking for. So let me now show you another example on Pinterest. So Pinterest, the setup's going to be here, and I'm going to teach you about trigger bars. So this is where I was buying Pinterest. I currently have a long position at the time of filming this this video. So we zoom in on Pinterest. Okay, we can see it's building this base here, a little bit of like maybe a wedge type pattern or something like that. But then it has earnings reaction here. You can see the high relative volume, 52-week high on the relative strength line, and this is more of a shakeout demand tail on the earnings. So it gaps up, opens here, sells off during the session, but someone stepped up and started buying it, and then it had a strong close and pushed up. Then we're looking for the stock to do specific things there afterwards. But if I just back it out on Pinterest a second, those of you that are familiar with Stan Weinstein's stage analysis or the Wyckoff price cycle will recognize this, and you'll go, wow, that there is a phase 4 downtrend into what looks like a very large phase 1 accumulation base. So this here looks like the stock is trying to break out of a very sizable phase 1 accumulation base on volume, on earnings, and it's hitting 52-week highs. It's showing a lot of relative strength. So this is late in a phase 1 base, transitioning potentially into a phase 2 uptrend. So this could be early in a phase 2 uptrend. There could be a lot of running room for this stock. So you want to be aware of the context of the price cycle. Where is the stock in the price cycle? Is it potentially late in a phase 1 base trying to come out into an early phase 2 uptrend like we see here with Pinterest? So then what we want to do is get a little bit of a feel for the fundamentals here. Okay, Pinterest came out. So this is a setup here. I'll teach you about this in a couple of minutes time. So this is the earnings reaction. What happens? Was there a surprise? Well, the estimate was for 20 cents. Okay, 0.20 there. So it's for 20 cents. So there was a surprise because the reported number was 28 cents. So the market estimate was 20 cents, but Pinterest reported 28 cents. That's a positive surprise of 38%. The market is caught a little bit off guard here. Institutions go, well, okay, we're caught off guard here. Maybe we want to start buying. Maybe the company raises full year guidance as well. So again, it's going into the details and trying to understand the stock a little bit. Then what we're looking for is a stock to do specific things and start finding supportive action around one or more key moving averages that we'll come on to in a few minutes time. Let me go and show you the market Smith data for Pinterest, right? Let's load it up. So we've got Pinterest. That's the earnings gap up bar there, okay? And then we're looking for the base to set up. Now the entry is going to be here when there's an extreme amount of contraction, and look how the volume dries up. That's what you're going to learn in a minute. But we can see here, year over year, earnings are up 155%. So Pinterest on this day here reports year over year, earnings are up 155%. That's going to get a few people's attention. Then you can see that the sales are up 11%, and then we have an acceleration in the margins over the prior quarters from 9.6% to 20.1% to 25.3%. So we have earnings accelerating, sales accelerating, after-tax margins accelerating, and as we look there from a kind of price cycle standpoint, Pinterest looks like it may be trying to come out of that large phase one base. We take a look at the estimates here. So this is something else that I like doing. Pinterest 2023 estimates up 74%, 2024 20% with the guidance up. We want to take it a step further though. So I like to see that the estimates in terms of the annual EPS is moving into all-time high territory, which here it pretty much is moving. There was kind of a good year here in 2021, but 2024 the expected EPS is going into all-time high territory with $1.30. See the acceleration here. So Pinterest is hitting on quite a few kind of metrics, key fundamental metrics that I'd be looking at. Now let's go and talk about the setup a little bit. Now I'll put the bar by bar replay function on this one for you. So we'll go bar by bar here. I'll just bring it over like this actually. I think it'll be easier rather than do the bar by bar because it skews up the bottom of the chart. But what we're looking at here with Pinterest is we'd like the stock to find supportive action around either the 10-day EMA, which is the black line, or the 21-day EMA. So if you've watched the blueprint video on the channel, you'll be familiar with what a gap down reverse bar, what a shakeout to mount, what a trigger bar looks like. So you'll notice that the final bar here is what I call a trigger bar. Now oftentimes that's a tight low volume inside bar. It's not quite an inside bar by the looks of it, but you can see that the volume is stair stepping down. So I'm very visual how I learn. See how the volume is just stair stepping down here. So when you get tightness in price and the stock is in a strong uptrend, basing constructively, it's somewhat of like a Darvis box flag type pattern, and then the volume starts stair stepping down like this, you get the tightness in price. That's indicative that there's little supply coming to the market for this stock. There's little selling around for this stock. So this is then Toby Crabell's point of contraction and expansion. The market moves from periods of contraction to periods of expansion and back again. So following this tight contraction, this is the Minervini VCP point, right? Volatility contracts oftentimes before a breakout. So we like to look for these areas of contraction. Why? Because we can get a favorable risk versus reward trade on it. So this is what we're looking for. We're looking for a positive earnings reaction. The stock then continued to trending up and bouncing off either the 10-day EMA, the 21-day EMA in the vast majority of cases. Bigger bases, like you're going to see on SolarEdge, you may get the 50-day moving average there, and then it's about setting up the trade. So let me play this for you. So I was then buying Pinterest as it broke through the high of this bar, okay? So then we're trying to plan out the trade, and we're trying to create a favorable risk versus reward trade. So you can see, assuming perfect execution, the initial risk on this trade is going to be 1.15%. That's a very tight stop loss if you're swing trading on the daily chart. Then for me, it's about the risk mitigation that I've covered in other videos. I'll either look to sell half or a third of the position at 1 times the initial stop loss, or maybe I'll move it up. Then what I'm trying to do is ride the 10-day EMA and 21-day EMA for parts of the position. So if I sold 1/3 to free roll, if I sold 1/2 to free roll, then I'm looking for a close below the 10-day EMA, sell a third or a quarter depending how much I have left. Close below the 21-day EMA, sell the other third or quarter. If I think the stock starts getting extended from the 10, I may choke off part or all of the position, depends how extended and climactic the stock gets. So that's then covering okay. The setup, what you're then looking for, trigger bars, shakeout demand tails, gap down reverse bars around 1 or more key moving averages, controlling the risk. You want to think about the initial risk relative to the stock's 20-day ADR percentage. I'll show you the indicator I use this one here, Armour Schluckler. I use that one there, put it in the top of the chart just like this, okay? So I'd like my initial stop loss to be 1/2 to 2/3 versus the ADR percentage when I'm trading a trigger bar, which is oftentimes a tight low volume inside bar sitting on 1 or more key moving averages. Most commonly, that's going to be the 10-day EMA and 21-day EMA. If it's a gap down reverse bar or shakeout demand tail, that's going to be closer to the ADR percentage, maybe 1.5 times the 20-day ADR percentage, but anything over 4-5%, I really got to be justifying it and thinking that's an amazing setup. So you're really then looking for these earnings gaps. We'll do this a little bit later on the screening side of thing on my custom built screener, and then you're looking for the bases to be setting up. Let me show you a couple more examples. So we've got AMD here, okay, and you can see the earnings gap. So I've been pointing to them here, okay, this one here and these bars over here. I appreciate the earnings gap is actually here, but then it really follows through in the next session, and look at the volume coming through. But then if we just zoom AMD out, again, the price cycle standpoint is going to be really important. We can see that AMD is actually potentially building a very large phase 1 base. So this is the phase 4 decline over here. So you have phase 4 decline into a phase 1 base. Looks like it's trying to come out of potentially a big phase 1 base. Look at the volume coming through. Look at the relative strength with the 52-week highs. This is very good. And then this is the context of a powerful phase 2 uptrend. That's where we really want to be involved in a stock late phase 1 as it's trying to transition out into phase 2, or in a phase 2 uptrend where it's displaying a lot of relative strength. So let's just zoom back in on this chart, because what you'll see here, I pointed to numerous candlesticks with either black arrows or these electric blue, these light blue arrows. Why am I doing that? Well, if you've watched the blueprint video on the channel, you'll be familiar with these type of candlesticks that I'm pointing to. These are shakeout demand tails. These are gap down reversal bars. These are trigger bars. Now, if it's a black line, I'm indicating the setup is on the 10-day EMA. If it's a blue line, you can see this bar here. This is a gap down reversal bar onto the 21-day EMA. So I'm showing you there are multiple setups here. Now, is everyone going to run up and go up 1,000%? Absolutely not, okay? This one here rolls back over. So active risk mitigation, you probably free rolled it, and maybe you're knocked out around about break even on the trade. These trades over here would have been really successful trades. These trades here, really successful trades if you're then looking to ride those intermediate term trends. So not every kind of post earnings breakout setup is going to be a mega mover and go up 100%, 1,000%. It doesn't work like that. Now, what I do want to touch upon here with AMD is I want to take it a step further in terms of your pattern recognition. So not all earnings reactions are created equal. Now, AMD here, okay, breaks out of this consolidation and you get this bar here. Now, what's important about this bar here? This is as bullish earnings reaction bar as you'll possibly see. Now, why is that? Well, there's high relative volume coming through, many multiples of the 30-day average, hits a 52-week high. But what happens on the earnings bar itself? Well, price opens on the lower the bar. So price gaps, so the prior closes here, it gaps, it opens on the lower the bar, pushes up and closes pretty much on the high of the day. What does this tell you about institutional demand for this stock? There's a lot of it. There must be. The stock gapped on the open and then just pushes up. And it's a widespread candlestick up 52% on the day. It's up 52%. Do you think something material has happened for this company? Now, sometimes you can look and go, okay, there wasn't much of a surprise here in terms of the earnings or the revenue side, but maybe the company has said something to the market, kind of changed full year guidance. Maybe they've said if it's a biotech stock and it's not on the earnings, it could be they've just got FDA approval for a new revolutionary drug. For a company like AMD, maybe they report the kind of earnings and actually when you look at it, you're like, well, earnings aren't that good, sales aren't that good, but maybe the company said something to the market that then changes the outlook of the company. They say, wow, we've just got awarded this new government contract in Q3 and Q4 of this year. We're actually expecting earnings to come in many multiples of what it is we were kind of estimating to the market. Maybe something material like that happens. So when I see a bar like this on the earnings, I'm going, something has happened. And someone maybe knows something I don't, and they're buying a shit ton. And then what I'm looking for, here you can see a flag type pattern. This is a shakeout demand tail off the 10-day EMA. This is a gap down reversal bar off the 10-day EMA. This is a very tight bar in close proximity to the 10-day EMA, and look how the volume dries up. If we then fast forward it over here a little bit, here is another very good setup. Shakeout demand tail around the 10-day EMA. In this base here, gap down reverse bar, gap down reverse bar, gap down reverse bar, tight low volume inside bar over here, gap down reverse bar here, shakeout demand tail, trigger bar, low relative volume. So these are then the setups. So you will find when a company reports something like this in this reaction, oftentimes there's multiple setups in the duration of the move. Let me then go show you SolarEdge as well. So SolarEdge, we're specifically going to be looking at this setup over here, and I'll talk you through how to kind of set it up and then the trade management side of things as well. But I just want to take you through from a price cycle standpoint, okay? So we can see the stock here is potentially is in the doldrums, right? Phase 4 decline, and then it starts trending up like this. But what's quite interesting here is we're going to be looking at this setup over here, okay? But what chart pattern do you see? Big old cup and handle. Interesting. So again, fractal nature of the market, we'll see a lot of different setups kind of forming, and sometimes zooming out on your chart, getting the larger perspective and going, wow, okay, potentially a huge cup and handle here. Maybe there's a lot of causality here. So this is Richard Wyckoff's law of cause and effect. Large causes tend to lead to larger effects. So the cause being the base duration, and then the effect is either the trend to the upside or the trend to the downside. Now, when we start looking at the bottom of this potential big cup and handle, do we start getting some clues? Look at the volume spikes. Look at the volume spikes. You're starting to see it? Look at the volume spikes coming in. You're starting to see signs of accumulation. This is what visual buying looks like. This is what accumulation looks like. And then prior to this positive earnings reaction, we have another one here. And then if we take a look at the surprise, so the surprise here, the estimate was for 26 cents. The company reported 32 cents. There's a positive surprise of 22 cents. And then we're going to be looking at this one here. There's a surprise of 54%. The estimate was for 32 cents and the company reported 50 cents. Institutions are caught off guard here a little bit. Now, another little side point here is this is obviously a solar stock, as the name implies. If you saw a lot of solar stocks in this quarter having positive earnings reaction and beating estimates, I'd give that even greater weight. So potentially you see, wow, there's 2, 3, 4, 5 solar stocks that have recently reported, and you've seen earnings reactions like this, where the stock gaps up, opens on the low of the bar. If I now just remove all of these, the stock gaps up, opens on the low of the bar, remember the AMD point, and then pushes up. Think about that as the immediate presence of demand. Think logically about that, okay? What are you seeing? Well, the stock is gapping above the local highs here of this kind of base. It's not where it's, I don't really know what base you call that. Maybe it's got a bit of Davis box there, right? But the stock gaps above those, opens on the low of the day pretty much, pushes up. Look at the high relative volume. Look at the 52-week highs. There were 52-week highs before the stock even broke out here. This is a very, very strong stock. And then we're looking for the stock to find supportive action around certain moving averages. So where we're going to be looking and dialing the pattern recognition into is the black line, the 10-day EMA, the blue line, the 21-day EMA, and then we're also going to be looking around the purple line, which is the 50-day simple period moving average. Why? We'd like to see supportive action there around those moving averages. It's just a region where you're looking for gap down reversal buyer, shakeout demand tails, institutions stepping up and supporting the stock after a positive earnings reaction like this, and the stock's in a nice uptrend with 52-week highs on the relative strength ideally. But what you can then find with these bigger base durations is this base here. This is closer to, it's 36 bars. So that's going to be a decent sized base duration. It's 53 days in total, but 36 bars. So it's a multi-week. It's a multi-week base. We see that the stock is basing from early August to basically final week in September, so around about a 7-8 week base or so, right? So when we then go take a look at this, what are we starting to see? Well, this is a shakeout demand tail gap down reverse bar off the 50-day moving average, and then this final bar here, this is what I call a shakeout demand tail. So it's a shakeout demand tail on low relative volume, and volume has been below average, below the 30-bar average for around about 2 weeks. What's that telling us about supply, about selling? There's not a great deal of it, and you can see this period of consolidation. So remember what I said earlier, okay? The market moves from periods of contraction to expansion. So this is a period of contraction. We're expecting expansion to come through. So then the question is there a favorable risk versus reward trade to be had here? So I'm just going to play it forward. A bar, so I'd be then thinking about the trade like this, targeting it through the high of the bar with a buy stop limit order, stop loss sent below the low of that bar. That ties in with being underneath the low of that shakeout demand tail, underneath the 10, the 21, initial risk of 3%. If we imagine the 20-day ADR percentage is close to 6%, that's half the 20-day ADR percentage. That's a really favorable metric to be looking at, around half to 2/3 initial stop loss versus the 20-day ADR percentage. So then if our entry is here, so we have our entry plus free roll, want to do plus free roll like this. Okay, let's say we've then got 2/3 of our position, so we sell 1/3 at then 28.86 the free roll. What we're then doing is we're just riding the black and the blue line with other parts of the position, with remaining parts of the position. So maybe that there is the first close below the black line, the 10-day EMA kind of closes on it, so maybe you're a little bit lenient with the stock. But here, this is the clear change of character. So as much as you want to be dialed into positive change of characters on like earnings reaction, gap up, open near the low, push up, good volume, 52-week highs coming through, and then the stock bouncing around certain moving averages, you want to be aware of this. Okay, this is what I call bearish synchronicity. There's a synchronicity between what the price is doing and the volume as well, and it's bearish. So if we take a look here, the stock opens on the high of the day, goes out on the low of the day, and slices through the 10 and 21-day EMA. That is not a good sign. That is what distribution looks like. And remember what I said, expansion will follow periods of contraction. So here, pre-setup, we had this period in this pink zone here of contraction, and then the expansion was to the upside. Here, we have a period of contraction, and the expansion was to the downside. Now, oftentimes these periods of contraction will look like a Davis box, basically a rectangle, right? So you want to be aware of which way is the market breaking. So here, when it breaks to the downside, that's now violating my selling rules, my selling guidelines of trying to hold parts of the position for closes below the 10-day EMA and 21-day EMA. So that there is the exit with the entirety of the position. Now maybe the stock rebases, maybe the stock doesn't rebase and it goes down 70, 80%, 90%, depends on the market environment. Maybe it rebases and then goes again, and there is another positive earnings reaction. So maybe there's then another setup that follows. But once you get closes below the 21-day EMA, for me the intermediate term trend is likely over, and the stock is going to take weeks or potentially months to rebase. Maybe it never rebases and it just goes down 70, 80, 90%. We've seen that in 2022. Stock sold off really hard, like Tesla down around about 75%, PayPal down even more than that. So you've got to be aware of that and have selling rules and have selling guidelines. So what I'm going to do now is just take you through a little bit of the of the screening. So remember, we're running this screen here. Okay, this is the US post-gap consolidation. So I'm going to keep this free and available until the 12th of January 2024. So if you're not a member of my platform, but you want to go and have a look around it and try using this one for free, you can do that. There's a couple of other free ones in there as well. But come here, click preset screens like this, scroll down, and you want to click this, the post-gap consolidation. Click search on that. Now what we could do is we could actually filter this via 20-day average daily range percentage. So if we want to get the really quick stocks to the top, we can do that, okay? Now this screen here, we've got 89 results. So we're filtering down the US stocks from around about 5,500 down to just 89. And again, specifically what I'm trying to do here is try and identify stocks that could meet the criteria of what I've just been taking you through. So what am I doing? I'm looking for the market cap above 300 million, the last closing price above $1. I want the price to be above the 21-day EMA, above the 50, above the 200. Certainly the latter two, because I want that trend to be up. 50-day average volume, I want it to be above 100k. We could tweak that and make it much more kind of onerous if we were like above 500,000, above a million if we want the really liquid stocks. ADR percentage, I want it above 2.5. If I just want to get the really quick stocks, then I could crank that up to like 3, 4, 5 if I want to. Obviously, if you remember, you can go and copy the screen and you can tweak this as well. Now I want the 3-month percentage gain to be greater than 50%. Why do I want to do that? Because what I'm looking for is a stock basically in an angle of ascent like this. Okay, I want a nice powerful uptrend. So putting 3-month percentage gain at 50% is more so going to try and capture those stocks that are moving like this in powerful uptrends. Now, not all of these are going to gap. You're going to have to use your pattern recognition for that. So let's go take a look at a couple of these. So I'm going to click charts here. We've got it on a single one per row. We could tweak it and we could have 2 per row if we wanted to. So we're going to let these load up. And what I'm going to be looking for is this. Stocks in nice powerful uptrends like this. I got the 21 SMA there. You can put the 10 on there, the 50, whatever you want to do. You do that via your site settings over here. But I'm just going to go through and hit things like this, right? STTK, okay? I'm looking for this. You can see the volume coming through, okay? See the volume, see the gap. Now the stock is starting to consolidate. So then I want to be putting this in a watch list. I can click this here. This is called hamburger menu. I can click this here and I can add this into a watch list. I can then go and find my watch list here and then import that into TC2000, into a TradingView, MarketSmith, whatever you want to do. So I can then go and put these stocks here into a watch list. I can keep going through. Now, if I'm specifically looking at gaps here, IVVD, okay? Look at the gap up here. This is a biotech, so potentially it's FDA approval or something like that, or a positive trial result has come out. Instead of actually being earnings, it could be a gap on that FDA approval or something like that for a gap for a new drug. So you can see gaps, opens on the lower of the bar, pushes up there. Look at the volume coming through. Okay, maybe I want to be tagging this one, doing a little bit more work on that. Let's keep scrolling down. So again, I'm going to be looking for stocks in powerful uptrends. This is ANNX. Okay, biotech stock gapped. I don't really like trading biotech stocks, but gap up here, good volume. Maybe that can base. Maybe I could put that in a watch list. You can see here as well this LDI. So this is what's going to happen if you put that 3-month percentage gain at like 30%, 50%, maybe greater as well. You're looking for this. Can you see how strong this stock is? This angle of ascent is really, really powerful. This is a nice uptrend. Okay, so running this screen here, it's not always going to be a gap. There's kind of a little gap here, but you're really looking for this as well. So sometimes you'll see the gap, sometimes you won't see the gap. But this here, nice powerful uptrend. See this? Nice powerful uptrend. So you'll then start to see, okay, it's a flag, Darvis box, VCP, wedge, whatever it may be. Let me keep going down, see if I can find a couple of other ones here. This is AX, this is ALXO, that's my dyslexia there. So you can see the gap here, okay, starting to consolidate. It's another biotech stock. Again, not too keen on biotech stocks. This one here, this is CYTK, another biotech stock, okay? If you are seeing a lot of biotech stocks coming up on the screen, or a lot of solar stocks, semiconductor stocks, that can give you an indication of where some strength is. But look at this here, powerful gap up. Look at the volume coming through. So okay, maybe I want to be flagging that one as well. I'll scroll down to the bottom of this page, but you'll get ones like this here as well, where there's no obvious gap, but powerful uptrend and then pulling into the 21. Okay, that could look pretty interesting. This one here, we have a solar stock. I'll finish on this one here. So this one here, we have a solar stock ticker run Sunrun. So I'm looking at this here thinking, okay, potential cup and a handle. Now I can see the gap coming through here. Look at the gap up here. Look at the volume pulling in, shakeout demand tail off the 21. Okay, this is interesting. If I click 3-month here, that'll give me a 4-hour view. So here I can see the gap up. I can see the volume coming through. Okay, maybe I could go down to the 1-hour chart. Okay, and getting a little bit more information here. There's the gap, looks pretty powerful. Weekly chart, okay, phase 4 into phase 1, maybe it's trying to transition into a phase 2 uptrend. So this one here, I definitely want to be doing a little bit more research on this, because I'm looking at this thinking, okay, potential cup handle. I like the volume footprints that I'm seeing in this space. Shakeout demand tail to the 21-day EMA. If this can tighten, maybe it doesn't need to tighten. Maybe the risk makes sense. Now, if I want to open this up straight into TradingView, then I just click here. Now this will load the stock straight into TradingView for me, and now I can start looking at this and going, okay, stock's obviously been in a downtrend. It's now getting above all the moving averages. You can see potential cup and a handle here. I'm zooming in and I'm looking at, okay, look at this volume coming through. Positive reaction here. Now it's not on the earnings, but gaps up like this is powerful. I want to be looking at this. Now, is the risk going to make sense on this stock right here? 8.5% initial stop. I don't want to be near that. But if this stock can kind of maybe bounce, tighten up, something like this, that could look really interesting. And then we have this bigger cup and handle type pattern. So that is it, guys. I will wrap the video up there. Remember that you can go and access this screener for free until the 12th of January, and then I will take it down. So I really hope you've enjoyed that video. You've learned a little bit about post earnings breakout setups. I look very forward to seeing you in a future video.